All right, welcome back to Follow the Money Radio. So grateful that you're joining us. And today we are joined by a very special guest. His name is Vijay Boyapati, and he is a former Google engineer and is a friend of Austrian economics, has been interested in the space for over a decade. And he is the author of a brand new book entitled The Bullish Case for Bitcoin. Vijay, it's wonderful to have you on the program today. Thanks for joining us.
Thanks, Jerry. It's great to be with you.
Absolutely. So let's begin with a brief introduction to yourself, Vijay. You have written this book, The Bullish Case for Bitcoin. Tell our audience a little bit about how you first learned about Bitcoin and what drew you to this monetary project.
So I have a background in Austrian economics, and I'm sort of philosophically libertarian. I worked at Google up until 2007, and then I quit my job to go campaign for Ron Paul, and sort of went through the political process and got to see that up front, very close and personal. And it was actually, it made me very pessimistic about affecting change in the US, as someone who wants to see a society that's more free. And then, a few years down the line, I came across Bitcoin when a friend of mine, we were betting on Federal Reserve policy, and we were betting whether they would hike rates or they would keep rates at zero. This is back in 2011. And I won that bet. And the bet was for a single silver eagle, a 1 ounce silver coin, which at the time was worth about $50. And my friend, who's one of the best investors I know, said, "Hey, there's this other thing called Bitcoin that I've found out about, which is way better than silver. Can I just pay you in Bitcoin?" And I had no idea what he was talking about. And I said, "Okay, sure, pay me Bitcoin." And he asked me to, run the software. I had no idea what I was doing. I downloaded the Bitcoin core software, and it began to download the blockchain. And that took, an hour or two on this tiny laptop that I was running. And I was like, what is this? My laptop's fan started spinning because it was processing all these transactions. And I said, what is this? And he said, don't worry, just let it finish. And then he showed me how to create an address, a Bitcoin address. And he sent me 5 Bitcoins, which was the same value as the silver coin at the time. And he showed me on a very early primitive block explorer that he had sent me those Bitcoins. You could see them, you could see the transaction, you could see that the funds had been transferred to the address. And again, I had no idea what any of this meant. It was a bunch of strings of letters and numbers, which looked really confusing to me. But yeah, that's how I got first introduced to Bitcoin. And after that, after I sort of discovered what it was, I went down the rabbit hole and just became fascinated with what I think is a really important foundational question. How does this thing that's created essentially out of thin air, how does it have any economic value? Because this sort of defies the common economic understanding that people can just create money out of thin air. Most economists believe that money either gets its value from the government or it gets it through the market. There's two competing schools of thought, but neither of these schools of thought that someone can create money out of thin air and it could become incredibly valuable in the way that Bitcoin has become. So I've just been so fascinated with that question for the last decade and have been trying to wrap my mind around it for a long, long time. And I had the tools of Austrian economics, which I had spent a lot of time learning on my own. And I thought I had the ability to try and figure this out. And that's what I've been, it's been my big passion for the last decade.
That's really interesting. Many people who have an Austrian economics background, when they see Bitcoin, it makes total sense. Although it's interesting because some people, Vijay, who understand Austrian economics get pretty uptight about the idea that Bitcoin is invisible, right? They like the idea that they can hold a piece of gold in their hand. It's durable. They consider that to be the store of value. And Bitcoin, to some people, is really almost considered a Ponzi scheme. I've even heard, things like this. It's a Ponzi scheme. It won't last. It's just a piece of computer code. How come it, how can it really be fungible? How can it really be durable? And in your Medium piece, by the way, Vijay wrote a incredible piece that I saw on Medium. This is in fact how I first learned about you, was a great piece on Medium with the same title as the book, which I encourage everybody to check out, The Bullish Case for Bitcoin. And it's an excellent case, or excellent piece that lays out your bullish thesis on Bitcoin, but it also provides a compelling history on the origins of money. And in that piece, you have a great graphic, which I'm looking at right now, and I'll put up on the screen for those who are watching. And it compares Bitcoin to gold to fiat currency, specifically on store of value. Can you talk a little bit about why you, with an Austrian economics background, see Bitcoin as something that is on par with gold and certainly superior to fiat currency, kind of using that graphic that you employed with your piece there?
Yeah, sure. So money is a really difficult subject to understand and for people to wrap their head around. And one of the things that people find really difficult is that money isn't valued in the same way that regular financial assets are valued. So with stocks or bonds or real estate, it's people can understand how they're valued because these things produce cash flow. So a rental house produces cash flow, or stocks produce dividends, and bonds produce interest. So you can figure out what these things are, overpriced or underpriced. Because you just look at the cash flow and say, well, this thing is producing a lot of cash flow. This house is producing, say, 50,000 in rent per year. So yeah, I can justify $1 million valuation on the house. But with money, it's very different because money doesn't produce cash flow. Gold doesn't produce anything. The dollar doesn't produce anything. Bitcoin doesn't produce anything. These are all monetary assets. So this leads to the question of, how does money get its value? Well, money serves some really important purposes in any developed society. The functions of money that we traditionally understand are medium of exchange, that we use it for facilitating exchange to purchase things, and this is the function that most people understand money to have and most economists focus on. But money also has another very important function, which is store of value. And historically, money was used as a store of value in the sense that people would want to keep the savings that they made through their business ventures, or whatever thing that they were doing, they were accumulating savings. They'd want to keep it in something that held its value over time. And when you think about a store of value, over human history, there have been certain attributes that people valued in a store of value. Like if you were going to choose something as a store of value, what attributes would you want it to have? You'd want it to be portable. That's one obvious one. So for instance, gold is superior to a cow because it's very easy to carry gold coins around, but moving a cow around, some societies actually did use cows as money. But that was obviously superseded over time because there was much better money. So portability is one. Verifiability is another one. You want to be able to look at the thing and quickly be able to tell that it's a real and not a fake. So you want something that's easy to verify. Fungibility, that's one that people don't always think about, but is really important. One unit of the good should be equivalent to any other unit. So gold is better as money than diamonds because diamonds are irregular in shape and quality. So if you have one diamond, it's not the equivalent of a diamond of the same size because you can look very closely at it and say, well, actually this one's better. So that actually makes it not very useful in trade, not as useful as gold, because all the pieces of gold are essentially the same when you melt them down. And probably the most important one that people, might be able to think about, especially if they have a background in Austrian economics, is scarcity. You want to keep your savings in something that is scarce or hard to produce, because you wouldn't want to keep your savings in sand, for instance, because sand it's so abundant. Anyone can go to the beach and get a bucket of sand. And if that was money, your savings would disappear very quickly because other people would just say, well, I'm just going to go to the beach and get more sand and spend it. So you want to keep your savings in something that's hard to produce and is scarce. Now, if we grade different monies along these attributes that make for a good store of value, we see that Bitcoin is actually really fantastic. Certainly on the attribute of scarcity, Bitcoin is something that we've never seen before. It's what I call ultimate scarcity. Gold is much scarcer than fiat money because we know that governments can print huge amounts of money overnight, and the Federal Reserve just created trillions of dollars in the last year. Gold, you can't do that. You can't print more gold. You have to mine it, and mining is very difficult and costly. And in fact, it becomes more costly over time. So that's always put a limit on gold supply. But gold does actually increase in supply every year. The inflation rate of gold is somewhere in the order of 2% per year. So we continue to add to the stock of gold over time. Bitcoin, on the other hand, has a strictly limited supply. By design, there will never be more than 21 million Bitcoins ever produced. So you know that if you get some Bitcoin, that you will own a fixed fraction of the total forever. It can't be debased by more production down the line. So that is definitely a unique characteristic of Bitcoin, and one of the reasons that I think Bitcoin will outcompete other forms of money, because on the market, people value money based on these attributes. And as people start to understand that Bitcoin has superior attributes as a store of value, they demand it. They want to keep their savings in it. That process is, it takes time though, because it takes time for people to understand this. And not everyone has thought that deeply about money. But when it comes to savings, eventually people get it, because either they live in a country where their government has been debasing money so quickly that the value of the money drops really quickly, and they're looking for something to keep their savings in. Or, in a place like the United States where people don't think about inflation that much, eventually governments tend to have this habit of overextending themselves and inflating too quickly, and the value of the money starts to drop. So I think eventually everyone will come to an understanding that Bitcoin is superior as a store of value, even to gold.
The scarcity is really what drew me, Vijay, whenever I fully understood. And I was introduced to Bitcoin back in 2011, around the same time, you were learning about it. The fact that there's 21 million, if you do understand monetary history as you've laid out here, there's just never been anything like this. And even though I don't know if I would call myself a gold bug, but I certainly believe that gold is far superior to the US dollar. And I do believe that the dollar should be backed by something, even though I guess you could build the case that it's backed by oil or the full faith and credit of the federal government or whatever, but that's not really meaningful. So the scarcity aspect of Bitcoin, the 21 million, I think when people understand that, that's really one of the definitions of sound money, isn't it? Is having that scarcity. But it's really not even just 21 million, Vijay, because that probably a couple million, I don't know if you know the number, but a couple of million, maybe even more, have already been lost. I mean, if you send Bitcoin to the wrong address, it's gone. It's gone forever. So there are some missing Bitcoin that will never be retrieved. And when we think about gold, some people will say, well, gold is scarce, and it certainly is. But the flow that we're getting, that new gold that's coming up out of the ground, we know that gold is finite. We know there's only so much of it, clearly. But how much of it, there's really no way for us to know. We can know a little bit, but we can't know with a certainty like we can with Bitcoin. It's hardwired into the algorithm. We know that it's only 21 million. Now, another aspect that you bring up is the censorship resistance, which you give fiat currency, giving it a grading system. You give it a D, you give gold a C on the censorship resistance, but then you give Bitcoin an A. Talk about what censorship resistance is. Why is that a benefit, and how do you quantify that? What does that mean to you?
Yeah, censorship resistance means the ability to control your money without anyone else being able to take it into or interfere with it. And the great thing about Bitcoin is that it's digital, and to control your Bitcoins, you just need a private key, which is a piece of information. And it's a piece of information that you could keep in your head if you want. You don't even need to keep it on a physical device. And it's incredibly powerful. You could keep literally millions of dollars of value, or billions even, with a private key in your head. And the power that gives you is that you can cross borders with that value without anyone being able to stop you. Uh, and when I think about this, I always think about the example of the great Austrian economist Ludwig von Mises, who, during World War II, or the lead up to World War II, escaped the Nazis in Europe and made it to America. But he did that without being able to bring any savings, because it's very risky to carry a lot of savings on your person when you're fleeing across a continent ahead of an oppressive regime. Especially when it's physical, it's easy to confiscate. If people see that you have it, or they pat you down, or whatever, you go through an airport or a border and they pat you down, they can figure out that you have something valuable. So he made it to America without any savings, and he was living a very a nice sort of upper middle class life in Europe, and was a well-known professor of economics. And he got to America with nothing and was treated very poorly by the American academic community. And so his whole lifestyle and life changed because of that experience. And I think, well, what would it have been like if he had had Bitcoin? He could have had his savings in Bitcoin. He could have fled Europe, and he could have arrived in America with his savings intact. And this is a very, very powerful feeling. If you've ever had this experience of holding your Bitcoin and crossing a border, and knowing that you have those savings, and no government, even if they say, well, we have a limit of $10,000, you can't come into our country without more than $10,000. You can do that without anyone's permission. And that's what censorship resistance is. It's being able to have your savings without anyone else's permission. And we think about the fiat currency system, it's very prone to censorship. If anyone, if the government decides that anyone that they don't like shouldn't have money, they can just very easily close down their bank account. They can very easily say to Visa or PayPal, don't let these people transact on your networks. And certainly there are whole nations of people where the US government has essentially blacklisted them and said, for instance, the nation of Iran, you're not allowed to transact with anyone from Iran. Whatever you think about the Iranian government, which I'm not a fan of, there are millions of people in Iran who are just regular, hardworking people who will have their savings and want to live in a global financial system, and want to transact peacefully with other people. And I think it's a great tragedy that a government can just say to them, no, you don't exist. We don't want you to be able to transact with anyone, and we have the power to do that. Now gold is interesting because you can hold your gold, and in a way you can save it so that it's hard to confiscate. Historically, people did this by burying their gold. They would hide their gold underground, and if someone came knocking on the door trying to steal their gold, they could say, well, I don't have any gold, and they'd have it buried under the ground. But gold is physical, and its physicality is actually a hindrance to its censorship resistance, because if you travel across borders, if you fly from America to say Australia, and you have a bag of gold, it's going to be known that you have that bag of gold. Like, you're going to go through security, and they're going to say, sir, why do you have $30,000 worth of gold? And, more likely than not, you'll be allowed to go through, but maybe they don't want you to go through, and maybe they take your gold and they think it's suspicious. And if that's all your savings, that's a huge deal, right? That's a major deal. And maybe it takes months to get your savings back, because you have to go through a bureaucracy and explain to people why you have gold. So this is a very powerful attribute that Bitcoin has that its competitors doesn't have. And I think it's one of the big reasons that a lot of people around the world want to keep savings in Bitcoin, because they realize that if they ever want to move, they can take their savings without anyone's permission.
It's very powerful. I'm thinking about even some of the histories of World War II and some of the the Jewish people who were forced to migrate, and they were trying to take their wealth. They would often condense it down to metal, to gold, to jewelry, and even that would get confiscated oftentimes. So trying to port about this wealth, whereas with Bitcoin, if you can just simply remember the private key in your head, it's literally if you can just remember the key or have it written down somewhere. Of course, that's a little dangerous, but if you have it memorized, no one can take it from you. And I think, Vijay, this brings us to the concept of the government's view of Bitcoin. And this is also perhaps an area where some would say this is why Bitcoin might fail, is because the government realizes that the things that you have just said are detrimental to its ability to implement sanctions, perhaps on Iran, or to implement sanctions on a country or a person. So the government is dealing with this brand new technology, and it's a dollar late or dollar short and a day late, as usual, trying to keep up with what's going on. The Federal Reserve, of course, behind the Bank of China with its own digital dollar. And it seems that China has embraced this much quicker. They started working on their central bank digital currency back in 2014, whereas the Fed is just now kind of eventually going to maybe release some digital version. And I believe that central banks will have digital currencies. It'll probably just be a thing that we're going to see. I'd like to hear your comments on the central bank digital currencies, but specifically the government's view of this sovereignty, this monetary sovereignty that is now available to people. There's a brewing battle, and I'm curious as to what that does to your bullish thesis. Do you think that the government will ever be able to get its arms around this new invention and be able to stifle it the way that it can stifle dollars, the way that it can stifle gold? And what do you expect that battle, that brewing battle, to eventually look like? Are you expecting a big dip in the price, a big scaring out of the investor base? What's ahead in your mind for Bitcoin versus the government? What does that look like?
I think it's a legitimate risk for anyone who's interested in investing in Bitcoin, and it's a topic that I cover in quite a lot of detail in my book, because I think it is an important thing to consider. I think the US financial establishment, the Federal Reserve, is finally getting its first inkling that Bitcoin could be a threat to their control over monetary policy. But it really is still just an inkling. They haven't acted in any significant way. And there's a great irony that the US happens to be the nation with the most open regulatory position, most welcoming regulatory position to Bitcoin. And the irony is that the US has the most to lose. The US government, I should say, the US people, I think, have a lot to gain from Bitcoin, but the US government, because the US government has the world's reserve currency, which gives it a lot of power. And Bitcoin's rise threatens the dollar as the world's reserve currency. Now, this question to me comes down to whether or not Bitcoin gets enough political capture that it becomes politically infeasible to attack it. And an example I give of this to people is the company Uber, the ride-sharing company. And the way Uber worked was they would go into cities and they would start their business, and they would hire a bunch of drivers, and then people would be really excited they can use this new ride-sharing service, was much better than taxis. And local city governments are really slow to react to these kind of things. But the taxi lobby in a lot of cities would be very hostile and say, we need to regulate Uber, we need to shut it down. And eventually they would get enough buy-in from the city government that the city government would try and act and legislate against Uber. But by that time, Uber had enough drivers and enough people using Uber that they made a natural constituency for Uber that really wanted to protect and defend it, and would push back against these city governments and say, no, we're making money from Uber, or no, I'm using Uber every day. I need Uber. You can't shut this down. And it was a great strategy for Uber. They would go in and they wouldn't ask for permission. They just start their business. And in a way, Bitcoin is doing the same thing. It's not a company, but it's a new form of money that's been sort of launched to the world, and people are buying it, and they're starting to keep some of their savings in it. And once enough people keep their savings in Bitcoin, it becomes much harder to attack politically, especially in democratic nations. Because what politicians will see when they try and propose policies which are harmful to Bitcoin is that people will push back and say, no, you're harming my savings. I don't want you to do that. And eventually we'll see people who are elected to Congress. And we're already seeing this. There are members of both parties in Congress who are friendly to Bitcoin. And we've just seen our first senator elected who is openly pro-Bitcoin, who owns Bitcoin. And she's actively saying she wants to go and explain to her fellow US senators why Bitcoin is important, why we should have a friendly regulatory environment to Bitcoin. But Bitcoin is still small. The penetration of Bitcoin into the US population is still quite low. But I expect over the next 4 years, it's going to ramp up very, very quickly. And Bitcoin is going to get to the point where it'll be like trying to shut down a 401k, the 401k program. So many people have their retirement savings in 401ks that if the government tried to shut it down, there would be riots on the street. Or you can imagine another example is the government trying to shut down the internet. There would be riots on the street because it's so interconnected with the economy. So many people depend on it. So many people have their livelihoods connected to it, that shutting down the internet is just simply politically impossible to do. Bitcoin, I don't believe is there yet. I think Bitcoin is still vulnerable. But the good thing is governments still, they're so slow moving. They still haven't figured this out. And I believe, I'm very optimistic that Bitcoin is going to get to that point of political capture very quickly because its adoption curve is exponential. And while, maybe it's 5 to 10% of people own some Bitcoin in America, I think that will ramp up very quickly over the next 4 years. And I think Bitcoin will become politically untouchable in the US within about 5 years.
Very interesting. Yeah, that's a very, very interesting topic. And it does seem to be waning. I certainly was more concerned about it before I saw the growing corporate adoption. When you have PayPal, when you have BlackRock, when you have these major Fortune 500 companies implementing blockchain technologies, and they're even investing in Bitcoin like MicroStrategy and Square. Jack Dorsey, by the way, endorsing your book, by the way, the Bullish Case for Bitcoin. Yeah. So whenever I saw, this corporate adoption just spreading like wildfire, we see it now. And then we also, Vijay, and I want to get your take on this, we now see with El Salvador, the very first nation state that has adopted Bitcoin as legal tender, meaning that business owners down there, vendors, are required to accept Bitcoin if someone wants to use it. El Salvador has been using the US dollar since 2001. This seems like a shot across the bow, and certainly perhaps the first domino to fall. The US has to be nervous about this. What's your take on the legal tender law that's been passed in El Salvador? What do you think it means?
I think this is a profoundly important development for Bitcoin, and I am honestly surprised that it happened as quickly as it has. I didn't expect something like this for at least many years down the line, maybe 5 or 10 years. So what it means is that people in El Salvador will be able to pay for services, goods and services with Bitcoin. And they have this huge added advantage that now that it's treated as legal tender, there's no taxation on the usage of Bitcoin. And one of the disadvantages of using Bitcoin as a medium of exchange in the US is that if you've got savings, if you have savings in Bitcoin and they've appreciated over time, and I'm sure some of your listeners have some savings that have appreciated in Bitcoin, if they go to spend those Bitcoins, they will be taxed at the time of spending on the gain of those Bitcoins that are spent. And so that creates a huge friction to using Bitcoin as a medium of exchange. That taxation is completely removed in El Salvador. So Bitcoin can now function much more easily as a medium of exchange, which is going to attract a lot of capital. It's going to attract a lot of Bitcoin to that nation because there's a lot less friction, and it's a lot easier to create businesses around Bitcoin and have the Bitcoin move around without having to face taxation at every single step that the Bitcoin moves. I think it's also really important for El Salvador as a country because it provides a way for them to get money into the country from El Salvadorians who have moved to other countries in the US. Their sort of expat community who sends money back to their family in El Salvador, but they've been using things like Western Union where they're paying a fee of like 20 or 30% on the money that they send back to their country. So it provides a much more efficient way that people can get savings back into El Salvador without paying that sort of fee that comes from these money changes. In terms of the US, I feel like the government is so slow moving that they're not even going to recognize how significant this is, perhaps until it becomes really big and they recognize that El Salvador is now thriving and that they have all these people who don't have banks in El Salvador because they don't have a great banking system, and they have a lot of people who live in the country who are poor, who don't have access to financial services. All of a sudden, these people can use something and have financial tools that are all online. All they need is an internet connection, and they can use Bitcoin for their banking now. So now millions of people will have banking services through this new monetary system that's being created. And so I think this is great for El Salvador, and I think it's going to serve as an example in the coming years for other countries to follow their lead. But it may only be, when that happens, when 5 or 10 other countries say, yeah, we want to do the exact same thing as El Salvador because it's really benefited that nation, that the US government wakes up and says, whoa, this is becoming a threat to the dollar as a reserve currency. But other countries now have a different monetary system that they can rely on and know that can't be debased. No one controls it, and it's a great way for their citizens to keep their savings and to transact with each other, especially if they don't have banking infrastructure in the country in the poorer parts of the nation. So I think it's a very, very important development, and I'm incredibly excited to see how it develops in that country over the next year or two.
I'm speaking with Vijay Boyapati. He is the author of a new book entitled The Bullish Case for Bitcoin. Vijay, so one of the comments one of the pushbacks that many people have about Bitcoin is the volatility. Even with El Salvador, some have said, why would any business want to receive Bitcoin considering that it may not be worth what it is tomorrow, the next day, or 5 minutes from now? So the volatility aspect of Bitcoin, how does that play into your bullish thesis? And what do you say to those critics who would say it doesn't make a good money because it's too volatile?
Certainly, Bitcoin is volatile. We have to accept that's the case right now, and we can't just dismiss that. So I think it's again a legitimate question that needs to be answered. I think one of the things that people don't understand is that money evolves through various stages to become the fully fledged money that we understand the dollar is today. And this was talked about by William Stanley Jevons, who is the father of marginalist economics. And he explained that gold started off as essentially a collectible before it was money. If you go back all the way back in human history to primitive societies, gold was valued. It didn't sort of become money instantly. People picked it up as a shiny rock and said, oh, this is cool. I'll keep some of this. And as more and more people valued it in that way, it slowly transitioned to becoming a store of value. That is, people recognized that other people in society were willing to hold this thing because they could see that it held its value over time. Now, when something becomes a widely used store of value, then it becomes suitable as a medium of exchange. That is, you can start using it to buy other things like bread or milk. And eventually, when it's widely used as a medium of exchange, it becomes a unit of account. And what that means is you'll see prices in terms of that thing. So, for instance, that loaf of bread is 1/100th of an ounce of gold, for instance. And that's what we call a unit of account. So you go to the grocery store and you see prices in dollars. So the dollar is a unit of account in the United States. Now, money evolves through these stages and doesn't immediately become a medium of exchange. The reason we see volatility in Bitcoin is because it is evolving through these stages. It is becoming a store of value. And as it becomes a store of value, that means that more and more people are recognizing that it's worth keeping some savings in Bitcoin. And as you have their savings flow into Bitcoin, that causes the price to move up. As you have people sort of exiting because the price has gone up and they get a little bit scared and they want to sell some, the price can drop. So Bitcoin's volatility is really a function of savings flowing into and out of Bitcoin. And over time, as more and more people adopt Bitcoin, its volatility will go down because it will get to a size such as gold's market capitalization where it will be very hard to move the price of Bitcoin if you put in, say, $1 million. Now, I'll go back to a historical example. The Winklevoss twins, who were part of the sort of founding of Facebook, in, I think it was 2012 or so, they put about $10 million into Bitcoin, and that massively moved the price because Bitcoin was still a very small asset. If someone was to come to Bitcoin today and put $10 million into Bitcoin, it wouldn't budge the price at all because it's much, much bigger. Bitcoin's still volatile, however, because the size of capital that's moving into Bitcoin is much larger. So we have corporations putting billions of dollars into Bitcoin. Eventually, Bitcoin will get to a size where even billions of dollars won't shift it around very much. And my view is that when Bitcoin gets to about the capitalization of gold, which is about $10 trillion, it will have volatility very similar to gold. It won't move around as much. Bitcoin's capitalization right now, I think, is somewhere about $0.7 trillion. So Bitcoin still has at least 10x to go before I think its volatility will drop to the level of gold. But people should understand that the volatility is just a function of Bitcoin evolving towards becoming a fully fledged global money. When it does get to that stage, it'll be much, much less volatile.
That's interesting. So let's talk, as we move into our final moments here of this interview, let's talk perhaps about something besides Bitcoin. Let's talk about some of the alternatives. So there are many alternatives. There is Ethereum, which is the number 2 cryptocurrency or digital asset. And some have said that Ethereum could outpace Bitcoin because of its smart contract functionality, because of its corporate adoption as well. Corporations have certainly adopted Ethereum. So your bullish case or bullish thesis for Bitcoin, does it exclude room for other digital assets? Do you envision a Bitcoin-dominated digital asset class moving forward? Or do you see room for other competitors? And do you view that as good or bad? And which competitors do you like that are competing with Bitcoin?
I only own Bitcoin, and my bullishness really only extends to Bitcoin. I think with any product or service that has a network effect, it's very hard to unseat the dominant player that has that network effect. And I think Bitcoin has by far the strongest network effect. It has by far the strongest largest market capitalization. It has the biggest brand. It has the most and most talented developers in the world working on it. The most financial infrastructure built around it. All of these are part of the network effect that Bitcoin enjoys over its competitors. I like to give an example of Facebook. Facebook has a very strong network effect in the realm of social networks. And it's not that difficult to create a new social network. You could create Jerrybook, I could create Vijay Book, but that doesn't mean that people are going to use it. They want to go to the place where everyone else is. And the same thing is true of money. People want to use the form of money or the form of savings that everyone else recognizes is the best. I just think Bitcoin is so far ahead in this regard that it's going to take the vast majority of the market share. And in any space where there's a network effect, it's usually winner take most, if not winner take all. That means, sure, there could be room for some competitors, but I view in this space, the majority of the market capitalization is going to go to Bitcoin. And you could say like, if you look at Google in the early 2000s, there was a whole bunch of search engines around. You could say, well, maybe I should invest some in Alta Vista or Excite, or you probably don't even remember any of these ones, but
Ask
and
Jeeves.
maybe, yeah, ask Jeeves. There you go. You might have made a little bit of money, but the overwhelming gains that were made were in the one which had the dominant network effect, which was Google. So I don't like playing around with these like little altcoins. If you're a day trader and you're really talented at trading these things, maybe you can make money, but I think it's incredibly risky. To me, I like to be conservative. I think there is very clearly a dominant player in this space, a very strong network effect, and I think most of the value is going to be made in Bitcoin. So that's how I invest. And I view it as almost a conservative investment in that sense.
So speaking of investment, and from that perspective, what is your approach? Are you a dollar cost average investor? Do you have certain investment rules that you employ, or are you lump sum investing once a year? I mean, how do you approach it yourself?
I definitely like to put away money in Bitcoin. I think dollar cost averaging is a really great way of doing it because it sort of takes away the fear of the volatility. And a lot of people think, well, why would I put some savings in Bitcoin if it could drop, 10% or 20% or whatever it is? But if you're just putting a small amount of your savings into Bitcoin every week or month, it doesn't matter if it goes up a little or down a little bit. Sometimes it'll go up and you'll buy it when it's a little bit more expensive. Sometimes it'll go down and you'll get it a little cheaper. So I think that's a good way of thinking about it, and I think a lot of people are doing that now. They're just taking a part of their paycheck and putting into Bitcoin because they recognize that it's a better form of savings. And as more and more people do that, that's just going to continue to push the price up because Bitcoin has a fixed supply, and as more and more people put their savings into it, that has to force the price up. It can only go in one direction because the price going up is Bitcoin's way of accommodating more savings, accommodating more people who want to keep savings in Bitcoin. And I think the number of people who want to put away a part of their savings into Bitcoin on a weekly or monthly schedule is going to continue to grow over time.
Well, as I told you off the air, Vijay, we could go on and on. We could keep talking, but what a great voice of reason. We need more voices, I think, like yours. And your new book, The Bullish Case for Bitcoin, Jack Dorsey endorsing it from Twitter or Square, Adam Back endorsing the book, and Michael Saylor from MicroStrategy writing the introduction to the book, if I'm not mistaken. That's fantastic. So clearly you've laid out a compelling case here. For those who are listening to this interview and want to pick up a copy of the book, how does that work? Where can they find it?
So I launched the book on Kickstarter, which is a place where people can go to launch new products or services and a way of raising money. But it's sort of a temporary campaign, and that campaign is finished. And I'm just going to ship those books out to the people who backed my Kickstarter campaign. And once that's done, within about a month or so, I'm going to have it launched on Amazon. So it's not quite there yet on Amazon. But if people want to get a taste of the book, they can go to the article, and a lot of the content from the article has made it into the book. And they'll get a taste for what they'll find in the book. I would just say, come back in about a month, go check on Amazon, and you should be able to find the book there.
Yeah, we'll include a link to the Medium post in our show notes. Fantastic article, fantastic information you've shared with us today, Vijay. Thank you so much for joining us today.
Thanks, Jerry. It was great speaking to you.